You get free trade. You get free trade. We all get free trade. There has been a plethora of news articles coming out. I've seen it on social media and I've seen it online everywhere. There is a brokerage free trade war that is happening. It's broken out. No one's holding back and no one is safe. And in this video, I'm gonna break it all down for you. But first, if you're coming to the channel for the first time, I talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you and you want to increase the size of your portfolio, then make sure you hit that subscribe button and turn on the bell notification so you can be alerted when new content comes out. Now, free trade is not new to anybody by any means. In April of 2013, Robinhood actually announced that they were offering free trades. So this means that you could buy and sell stocks without having a commission attached to it. And now there are a lot of companies that want some of that market share that are coming in to compete with Robinhood, and I'm going to be talking about them right now. So I think looking at this article really sums it up in one headline. E-Trade is joining Charles Schwab, TD Ameritrade, and others in free trade, and it's hitting Wall Street hard. Before we get any further, I'm really curious to know how many of you are using these brokerages and how many of you are using brokerages like Robinhood. So let me know down below in the comment section. So if you guys have not been paying attention to what's been going on, E-Trade, just like Charles Schwab, is going to be taking the commissions off of their stocks starting October 7th. And if you're trading options on these platforms, you're still going to be charged 65 cents per contract. So just to give you guys an idea of what this cost cut actually is, if you traded on E-Trade, Schwab, or TD Ameritrade, you are charged $4.95 up to $6.95 per trade. So this is really a huge cost cut for them. And what we're gonna see is this reflected in some of their revenue. So unlike other brokerages, E-Trade actually sized this revenue potential hit, and that would have been $75 million in Q2. So we're not talking about pennies here, we're talking about a huge chunk of their revenue. Another brokerage that's getting tied up in this is Interactive Brokers, and they kicked off the latest round of the broker free war September 26th, and Schwab had spearheaded this earlier round in February of 2017 when they first lowered their commissions from $8.95 to $6.95 and then finally down to $4.95. So this has been happening ongoing, and it was only a matter of time where they would eventually hit zero. So these were in response to Fidelity, because Fidelity was also doing cuts at the time as well. So as a lot of these different brokerages are tying into fee-free trading, we're seeing new information come out regarding just the competition and the level of competitiveness with the fierceness that's going on in the market. So we saw that in a blog post, CFO of Charles Schwab, so Peter Crawford, actually had announced that new firms were trying to enter their market, and that could have been a dig at the zero fee trade Robinhood. I'm sure a lot of you watching this video are familiar with Robinhood. I talk a lot about it on this channel. It's pretty much what it's centered around, but that is one of the sole fee free trading out there right now. I mean, I know there's a couple others, but that is the main go-to that I see everybody using. So it's really interesting that this obviously Robinhood has made a huge difference because they have forced other companies to start introducing this fee free trading style, and it's really shaped a new way that people can invest their money and basically just like make a lot more money than they had previously because of the trade fees that were going on. Now, Robinhood responded to Crawford on Tuesday by saying that it remains focused on reducing the barriers to investing. So that's focusing on zero commissions as well as zero account minimums. To give you an implication of what this looks like for Wall Street and their stocks, this huge, massive revenue cut that a lot of these companies are going to see, E-Trade stock closed down 3.6% on the stock market. It started to nudge up 0.4% late. I mean, that's obviously not a great return in any way. Schwab stock took a 3.3% hit, so it was similar to what was going on with E-Trade, and then other brokerages are consistently losing as well. Now, TD Ameritrade stock dropped 3.3%, which you might think, okay, that's like similar with the other companies, but it tanked 26% on Tuesday. That is absurd for one day on the stock market, and Fidelity is held privately, so we don't know the implications of that, but obviously it's not looking great. One thing to keep your eye on moving forward, Robinhood's IPO. Now, this is definitely going to hurt them as so many competitors are coming into the market that have huge names, dominant players that are coming to compete with them. And, you know, this is a company that I likely would have invested in their IPO. I tend to stay out of IPOs because of their high volatility, but Robinhood is one that's a little different for me because it's one that I've used for so long. I'm familiar with them. I really like their company and their mission. I think everything is great about them, and this just makes it a little harder so I can find myself backing out, and I'm sure a lot of other investors out there are going to be doing the same thing because of this news. Now, obviously, you're going to want to be doing your own research into your investing, but for me, what I'm going to be doing is steering away from companies like this for some time, just till it levels out and we can understand the implications of all of this. So revenues are obviously going to be damaged, stock prices are going to go down. It'll be interesting to see how this keeps continuing to play out. Let me know what you guys think about all of this news. So leave me a comment down below. Have you been following along? And just give me your opinions. I'd love to hear what others are thinking. Now, for the second part of this video, I just wanted to cover some of my investing in the Robinhood app. So I'm going to hop right into that and just go over what's been going on. So obviously the market has been seesawing back and forth, and this week was a little bit rougher than what's been happening previously. So I just wanted to cover that chart real quick and just give a little bit of my insight on how you should be investing when the market tends to go down. So the past week, you can see we're not doing great. We're down 1%, but like where the market was down an entire 2% plus yesterday, I mean, this is just not terrible overall. So a little bit of a bounce back today, up 0.71%, but essentially I just want to urge a lot of the people that watch my videos are newer investors. So I just want to urge you to, you know, not make the mistake of panic selling when you see these small fluctuations in the market. So for my portfolio, $21 is a decent amount, and you could see at the day it fluctuated completely down a total of $12.29 at one point. So essentially, you know, just don't worry about these returns in the short term. Just make sure you're holding on. If you're investing smart for the long term, then these will eventually bounce back over time. And I would urge you, just as these stock prices continue to drive down, because I do believe there is going to be a recession coming here shortly, I want you to, have thick skin, really hold on to those investments that you believe in, and even double down. So buy more as the price continues to drive down. Dollar cost average, like I've been saying. If you guys want a little bit of insight into my portfolio, these are my investments right here. So these are pretty solid in my opinion. A lot of these are still undervalued, I think. Big players in these, all of these are dividend paying stocks. I really focus on that in this portfolio. I think you'll see me branch out a little bit into some growth sectors, some growth stocks, technology stocks that I believe in. I've been investing in them in the past, but just not necessarily for this portfolio and for the Robinhood challenge that I've been doing. But I just wanted to cover that real quick, give that little bit of insight that I have. I just want to share that, that thick skin, man, really hold on. Don't worry about these fluctuations. We will prevail. Now, obviously, if you're investing in some garbage stocks that aren't really going to do anything, you're going to want to, consolidate that stuff. Limit your risk so you don't have to deal with that and lose a bunch of money. So anyways, guys, that's all I've got for you in my video here today. If you have any questions regarding the news, my portfolio, Robinhood, any of the stocks that I talked about before, then just give me a shout. You can comment on this video, or you can reach out on my socials at DLitzTV, Instagram, Twitter, wherever you want to reach me. So thanks for watching, guys. Have a great day.